Welcome now, stocks. My apologies, it's been a while since the last time I posted. I'm currently studying for a licensing board examination for medical school and also working on my Mastering the Stock Market and Intelligent Investor course that a lot of you have purchased, so I really appreciate that. Thank you. So we're going to go a little bit into the technicals here, but we're going to have it in a one-on-one format. A lot has happened this week, and I wanted to apply some words of wisdom. 10 years in the market, and I wanted to give you guys some perspective here. First things first, the Federal Chairman Jerome Powell, the Feds, spoke earlier this week and talked about how he's retiring the word transitory. Now, if you don't know what this word means, Jerome Powell and a lot of economists have been using the word transitory to signify that inflation is going to go up and come down. Now people are saying that he is going to be hawkish. I wanted to just dive a little bit into inflation and why inflation is bad. Now, if you already have small profit margins, this inflation is killing you, which is a reason why Nordstrom has been down. I honestly think a little bit too down, which is really bad for shareholders as their earnings decrease because the profits go down, which is another reason why Nordstrom stock decreased. Now, I'm looking at that stock because I really think it's undervalued. So on top of all these issues, we have supply chain problems. Now, with this whole COVID variant coming out of South Africa, these supply chain issues are only going to get worse if other countries lock down, like for example, Germany. Now, this is where I get technical because a lot of investors don't understand the bond market. And if you understand the bond market, you will outperform the stock market. You will know so much that majority of investors don't know. Now, before we get there, I wanted to give you kind of my understanding of what's happening right now. I've seen this happen in the stock market before, literally December in 2018. A lot of investors right now are literally margining out. They bought more than what they can afford, and now they're being eliminated from the market. A lot of people like Jim Cramer that have been in the market longer than I have, they're pretty much laughing right now. They've been waiting for a moment like this where retail gets wiped out. You see, if you go ahead and you talk to the same people that were buying stocks in January back in 2021, in early January and February, if you would have told them, hey, you're overextending yourself, you're buying literally at the intrinsic value of the stock, you're buying Coursera at a $45 region. This is technically the value at that point. That's how much it was worth. They would tell you to F off. Get out of here, you suit. Get out, all these little comments because they don't understand the intrinsic value of the company. Now, if you were to talk to them, they would tell you, no, I'm going to sell. The stock market's a scam. You see how the market's bipolar. It's like almost mental illness, if you can say, right? This is exactly what I talk about in my Intelligent Investor course. In fact, I'm actually going to be publishing a book in the future that talks about these exact things. Every day when you check your Robinhood, Webull, Interactive Brokers, if you're from Canada, Mr. Market comes knocking on the door showing you a price of your stock. And this is just a hypothetical price. This is just what some people think it's worth. And these numbers can be outrageous. In the early January, they were overvalued and now they're completely undervalued in some sectors like small cap. And it's up to you to decide, are you going to sell or not every time you check Mr. Market? I always close the door. I'm like, no, thank you. Because I understand what I hold. I understand the game that this market plays. In fact, I go in and I say, you know what? If you want to sell to me, I'll go ahead and buy. Because this is the time, in my personal opinion, I'm not a financial advisor, but this is the time to buy. Now, let me go ahead and talk a little bit about the bond market. You see, the bond market believes that the feds are not going to increase interest rates. Now, if you go to Yahoo Finance and look at the bond market, I'm going to make a separate video about this for the visual learners. But if you go on to the bond market, you're going to see the bond yields go down. Now, when the bond yields go down, it means the bond prices go up because they're more valuable. Because interest rates are low right now, the bond market is actually going to be paying you higher on a fixed amount. If the bond market believed that interest rates were going to rise, the bond yields would go up. The reason why the bond yields would go up is because the bond prices go down. It's cheaper for you to buy more of them. Now, think of it like a stock. A great example to understand this is when the 2020 pandemic happened. Energy Transfer had around 30 cents per share, right? When the pandemic happened in 2020. The price literally dropped from around $12, $10, to around $3.75. Since the price dropped and they were paying the same yield, that dividend yield was even higher because you could afford to buy more shares because they were at a low price. That's exactly what would happen with the bond market. You see, if interest rates go up so high, the bond prices would go down because they become less valuable, because investors don't want to park their money in the bond market because it doesn't give them as much as what the interest rates are in the current time. So we get it. The bond market doesn't believe Federal Chairman Jerome Powell is going to increase interest rates, but the bond market is screwing up on one thing. Inflation is not transitory, as what the Feds was saying earlier this year. Just like in Chapter 2 of The Intelligent Investor, how does inflation affect stocks and bonds? And I talk about that in my Intelligent Investor course. But to sum it down and dilute it to the most easiest way to understand, stocks do better during inflation. Because remember I told you about that profit margin that keeps shrinking and shrinking? The only way to bypass that, and companies can do that, is by raising the prices, which is exactly what Dollar Tree is doing. They're no longer Dollar Tree, they're $1.25 of a tree, right? They're trying to increase how much they charge so they can secure that profit margin. You see, stocks can do that, bonds don't. So once we start seeing the CPI data come out, and if we do not hit an inflection point, or if the inflection point stabilizes higher than the 2 to 3%, everyone in the bond market is going to say, I would rather be in stocks. So now let's get to the fun part. A lot of small caps now have been struggling. Clover Health, holy moly, $4.50. But you know what's interesting? We're currently in the cycle of tax loss harvestation. If you look at the inflow and outflow data, I'll try to put it up above me here so you guys can see it. You're seeing a lot of small to medium sell orders outflow, then inflow. And in fact, if you look at the large scale orders, they're not selling at these prices. Now, you have to ask yourself, why is retail selling? Well, some of them maybe just don't believe in the company anymore. Maybe some of them might say, hey, I don't like this company. I don't believe in it. And most likely because they probably bought based off of the share price. They bought based off of a narrative. They did not buy based off of fundamental analysis. Now, check this out. I think they sold because they were margined out. They had to sell. That's it. They couldn't hold any longer because they bought what they could not afford. And according to the Intelligent Investor, once you use margin, you are speculating. Speculating is not investing. A stock can go way overvalued and it can also go way undervalued. And if you understand the fundamentals of the business, you understand the intrinsic value. The word intrinsic is a very strong word. You understand what you have, what you hold, no matter what the price is. I know that I'm sitting on gold right now. In the past couple of videos that I presented on YouTube, I showed you that a lot of people are selling their small caps and going into big companies. What we are going to see in January and February of early 2022, everyone's going to be selling the Facebooks, the Apples, and the Microsoft. Just analyze one of the most wealthiest people on our planet. What did Jeff Bezos do this year? He sold more Amazon stock than he did in the history of him owning and creating Amazon. What did Elon Musk do? He sold his Tesla shares. Not all of them, but he sold a good chunk of them. How about the CEO of Microsoft? He's been selling shares. There is going to be a sector rotation from large caps to small caps. And stocks like Clover Health is going to see an influx of cash. The question that you have to ask yourself is, where do you want to be at in the buying spree? Do you want to follow the herd and do what the herd does? If you do that, from my personal opinion, again, not an advisor, but if you follow the herd in the market, you are going to lose. You need to do opposite of what people are doing, but you got to do it as an intelligent investor. Right now, people are selling. People like us are buying. Chamath is buying. People that know the intrinsic value are buying. And later, when the stock goes up to insane evaluations and it's like, whoa, this is too much, then we're going to sell and we're going to rinse and repeat, because that's how intelligent investors operate. One last bonus if you stayed this long. Once the Biden administration passes their social infrastructure bill, as they just avoided the government shutdown, which is great for the stock market, we are going to see a sector rotation, because that's how the market works. One sector that I've been watching very, very closely is the marijuana sector. The Democratic Party wants to legalize marijuana at the federal level, and I know it will. By 2035, companies like Tilray, ticker symbol TLRY, is going to explode. I'm just waiting for that marijuana sector to rotate because just that's how people work. Again, you gotta work undercover in the market. You gotta work under the radar. When people are buying this and that, you ignore them. You focus on the mission, and that is to find undervalued plays. As always, if you made it this far, consider liking, subscribing, and turning on all notifications. It is my highest privilege and honor to provide you this information because as each and every one of you rise, we as a nation, as a planet, as a species rise together. Education is power. God bless you. I'll see you on the next one.